Ladies and gentlemen, welcome back to the channel. We have breaking news for AMC stock investors. AMC stock is up 5% at the time of recording this video. We also have a big catalyst coming out here in after hours today, but I do want to go ahead and get started with this breaking news because it is having a material impact on AMC stock and can have a material impact on AMC's fundamentals and fundamentally impact the company in a positive way. So let's go ahead and get into all of that. Hit the like button and subscribe to the channel if you have not done so already. And let's get started with this breaking news. It says, why lenders are meeting to discuss AMC's debt. It says AMC stock is popping slightly higher amid debt concerns. Management is mulling its options in regard to how to address its $4.6 billion in long-term debt. Heaping on the trouble for AMC stock is an anticipated soft year for Hollywood releases. Far from its meme trading days, AMC Entertainment is weighing its options amid a large long-term debt load of about $4.6 billion. The biggest problem is the debt coming due in 2026. It's over $2 billion. If AMC, the management, cannot get AMC stock up much higher than where it currently is, they're never going to be able to sell enough shares to pay off their debt. And that becomes, Chapter 11 kind of bankruptcy scenario. That's a problem. It says this past Friday, the company's senior lenders held a call to discuss efforts to bolster the company's balance sheet, according to insiders. That's interesting. If you want to bolster the company's balance sheet, the only thing that you can do at this point for AMC is to raise more debt, which is very counterintuitive to what's going on now. Maybe, a lender would be willing to pay off the previous debt and give you debt that's cheaper, right? A cheaper interest rate. Sure, but that's not bolstering the balance sheet. The only way to really bolster the balance sheet for AMC is to get AMC stock higher and to sell stock. I've been talking about this for a long time. You likely see a MOAS-like event if AMC comes out and they say, hey, we're not going to dilute shareholders for a period of time. I'm sure that is being talked about. Contrary to popular belief, the way AMC will raise the most money right now is not diluting shareholders. In fact, giving shareholders a period of time of no dilution. Let the stock rise once that period is over. You can start selling stock, and maybe AMC's $10 or $15 or $20 by then. Boom, you're going to bolster the balance sheet quite a bit. Now, this was according to insiders, and per a Bloomberg report, people familiar with the matter stated that AMC is weighing options on how to tackle its debt. The deliberations are at an early stage, and no final decision has been made. This can only end in a positive if it leads to something, right? If something comes out of this, it's going to be positive. And I think that's why AMC stock is up 5% right now. It says, according to Bloomberg, the lenders have previously met. However, a heightened urgency now exists in the discussions because of the weak slate of movies expected for 2024. So AMC is expected to lose even more money. That's a problem. That's very problematic. Adding to the woes are movie ticket sales in the US and Canada, which are still below pre-pandemic levels. It says efforts to revive AMC stock have fallen flat. A major dilemma for AMC stock is what would happen if it does nothing to address the core liability. Without a debt restructuring, reports Bloomberg, the company's repayment obligations will balloon in 2026 I stand corrected. I knew it was in between 2 and 3 billion. It's actually closer to 3 billion of its total obligation will be due. AMC got into this hole to fund an acquisition spree that created the world's largest cinema chain, but the decision has now put it in a precarious position. As of the quarter ended December 2023, the company held $884 million in cash and equivalents. Still, its free cash flow was in the red for 2023, coming in at a loss of $445 million. While that is an improvement over the free cash flow loss of $848 million in 2022, AMC's slow revenue growth is a perplexing challenge. Yeah, no kidding. In 2023, AMC posted revenue of $4.81 billion. While that was up from $3.91 billion in 2022, it's still down sharply from $5.47 billion AMC posted in 2019. To be fair, AMC's CEO Adam Aron isn't taking this matter lying down. Aron has been creative in terms of Courting retail investors. Previously, the executive has met with investors for exclusive screenings at theaters and sold limited edition popcorn buckets, among other initiatives. Still, the efforts have fallen flat during the meme stock phenomenon. AMC traded for as high as $450 or a split adjusted price of more than $700. Now shares trade for roughly $4.10 a piece. So you are a shell of a company of what AMC was at the peak. And then it says on TipRanks, analysts have a consensus moderate sell rating for AMC stock, which is a clear indictment. This assessment breaks down on 4 holds, 3 sell ratings, and significantly no buy recommendations. And the biggest investment thesis problem, biggest problem with investing in AMC is that debt that comes due. Now that they're in discussions, hopefully some good news can come out of that. Again, one potential positive out of that situation is if another lender, call it Bank of America, comes in and they say, yeah, we'll refinance you the debt that you were paying at 12% or whatever for 2026, and we'll do that same debt amount at 7%. Fine, okay, that's great. But the problem is AMC is not going to be able to raise that much capital. I really think the lenders, the banks, the investment bankers in that room are going to advise AMC to give us a period of time where they're not going to dilute shareholders, because clearly organic methods of trying to get AMC stock higher, they're just not going to work, right? They're just not going to work. But if AMC came out and said they're not going to dilute shareholders for a period of time, that's probably the only thing at this point that would get AMC stock to rise meaningfully. We're talking like $10, $15, $20 per share. We were just there not long ago, actually, believe it or not, in the $11 range 2 earnings ago. And sure, you've seen some small dilution since then, but nothing too major, right? So I think that's a very real possibility that could come out of these conversations. So I definitely want to be on watch here for AMC. This breaking news is something a little bit more material than what we're used to for AMC. And some good news likely comes out of it, because 2026, just a jump, skip, and a hop away, believe that or not. Now, AMC stock here on the day, let's take a look at the Ortex data. You do have 2 orders totaling about $32,000 from hedge funds and institutions with a positive order value of 0%. If you take a look at the short interest activity, you do have 14.37% short interest of free float, $154.12 million currently in short positions. Days to cover sitting at 2.7, and about 38 million shares that are currently sold short. Shares out on loan about 54.5 million, cost to borrow 1.11%, and utilization of 71.25%, with a short score of 70.24 out of 100. Cost to borrow fees today currently at about 3%. The biggest catalyst that we're going to have for AMC here today is likely going to be GameStop earnings today and after hours. Now, when I was first looking at AMC stock, I'm like, maybe AMC's running, 5%, maybe not on these restructuring talks, these debt talks that AMC is having with lenders, but maybe it's just a pre-run up into GME earnings. That doesn't look like the case, because GameStop is actually slightly in the red today, at least when I checked. By the time you guys see it, who knows, GME could be up 10% or so. But heading into GameStop earnings, taking a little bit of a breather here. So I think AMC's really doing this one on its own today. You can see on StockTwits, GME is the 3rd most talked about stock, even though it is down about 0.5% today. So I think that's pretty interesting. There's still a lot of people talking about the stock, even though it's down. Typically, you don't get too many red stocks that come up here on StockTwits all too often, right? And we'll see what happens with GME earnings. The stock's pricing in like 25+% for the move after earnings. And what I found this earnings season, if you're pricing in 5-10%, the stock usually moves right at about that, right? Usually what is priced in this earnings season. Sometimes you can get big outsized moves, but you usually move what's priced in. So expecting a big move from GME. If it's a move to the upside, it could have a positive effect on AMC as well. So I think AMC is starting to get really a tailwind here from these debt restructuring talks that seem to be positive for the stock. And potentially, if GME earnings are also good, you could have these 2 catalysts working together for AMC to send the stock higher. Now, sentiment here on the day today for AMC on StockTwits is bullish at 55. Yesterday, it was bullish at 63. So not as bullish today as yesterday, which is very interesting considering yesterday the stock wasn't doing a whole lot. Today, the stock's at 4.5%. Who knows? Retail investors are retail investors. Message volume today is high at 57. Yesterday was low at 43. That's not a huge surprise. And the participation ratio today is at 55, roughly where it's been for, kind of a while here, right? It's been right at about 54, 55, 56. If you start to break out with the participation ratio, that's going to be a really good sign. More people are looking at AMC, potentially looking at buying AMC. Now, option activity for this week via Stock O Tracker, you got about 6,000 calls currently in the money, 51,000 calls out the money. In the money puts at about 4,300 and out the money puts at about 19,000. So 2 times as many calls this week compared to puts for the week. That's typically a pretty good ratio for any stock, pretty good ratio for AMC as well. But options don't mean everything. You can still get down moves on a big bullish week. You can still get up moves on a big bearish week for the option activity. It is a lower option week, though. Like a couple of weeks ago, we had hundreds of thousands of options expire. So when you do get lower option weeks, you can actually tend to move more for AMC. And that's just something I've noticed over the years. Those big option expirations, maybe it's because they're so cluttered and there's so many positions already on the options chain, but you don't tend to move a lot on large option expirations, or if you do, you tend to move huge. But most of the time, you tend to move like not at all. Percent of stocks above their 50-day moving average today is up 1.34%, seeing a nice little move higher across the board. Not a huge move, definitely for the broader markets, but a decent move nonetheless. If we take a look at the broader indexes, looks like everything's quite comparable today, up about 1/3% across the board, with the NASDAQ outperforming slightly, up 0.39%, and the Dow underperforming slightly, only up about 0.25% or so. So, yeah, pretty decent day out there, but really, it's not a lot going on. We did have some data that came out today with durable goods orders month over month. This came in as a little bit of an upside surprise, believe that or not. The economy is continuing to be strong, and I think the markets ultimately like that, right? 2022 and 2023 were the weirdest years where good news is bad news was good news. Even to some extent in 2024 as well. But I think, bottom line is people want to see the economy strong, no matter really what the Fed's going to be doing. And durable goods orders did beat expectations to the upside today, coming in at 1.4% month over month. The estimate was 1.1%. Now, the last month was revised lower from negative 6.1% to negative 6.9%. So those revisions can be quite large. So we'll see if this number actually sticks, but it's showing the economy is definitely not red hot, but it's not falling through the floor either. It's not looking like an imminent recession out there. With that said, AMC stock, if you are a bull, needs to get above that 50-day moving average, currently at $4.34 per share. The stock's currently at $4.27 per share. So you're pretty close to that. Let's say Jamie has good earnings. You're probably going to break above that, and your next stop would be that 100-day moving average, potentially setting you up for upside that could look something like 20-30%. So if you do get above that 50-day moving average, yeah, things can get quite exciting to the upside. So we'll have to wait and see what happens. If Jamie has bad earnings, that's going to throw cold water on the stock, almost certainly. And I would watch for support around $4 per share until we get more news about this restructuring of AMC's debt. Hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.